Welcome to the After Coffee Show with your host, Antonio Newton of the Newton Group. Today's guest from Ameris Bank, award-winning mortgage banker, Teri Smith.
Hello, everybody. My name is Antonio Newton with Coldwell Banker. Thank you all for watching After Coffee. Today, I have the honor of interviewing Miss Teri Smith, the infamous Teri Smith from Ameris Bank. So, Teri, welcome. How are you today?
I'm good. How are you doing?
I'm
Thanks
doing
for having
good.
me.
Thank you. Thank you for taking time out. I know right now you guys are busy and everything, so for you to take time out to sit down with me, I greatly appreciate it.
Made me dress up today too.
Yeah, we got to stop working from home,
That's
right? So with everything that's been going, well, before we get in, tell everybody kind of about yourself and if you're from here, how long you've been in mortgage industry and that kind of stuff.
Well, I have been here most of my life, so yes, you could say that I'm a native of this area and went to school here and have lots of old friends and associates in the business because I have been doing it for about 31 years.
Oh, wow.
And have passed it down in the family, so my daughter's also in mortgage.
Okay, awesome.
The kids were always around it and with me all those years, so.
I bet y'all share stories now, don't you?
Yeah.
You won't believe about this that happened.
Yes.
Well, 31 years, I mean, that's a long time. I'm sure you've seen a lot. The industry's change and adapt and grow. So with that wealth of knowledge, what tips would you have for like a renter or someone who was trying to become a first-time homeowner?
Well, everybody has said it. It's all about credit and your income. Those are the two big major things. Right now, the guidelines are a little bit different during the COVID.
Obviously, right?
Okay, but still, I mean, it's the credit scores are different for each type of loan, and the debt ratio is different for each type of loan. Each risk of borrower. Your higher credit scores, then of course the higher the debt ratio. Just a lot of things. Every loan is different, even though we want to call it like a cookie cutter. Every scenario is different. So.
Okay. Well, what about, so that's for like home buyers or first-time home buyers or renters going through the process. On the reverse side, if you have a home seller, what information or what tips would you give them in terms of the lending process from your perspective?
Okay, well, when they go to put their house on the market, of course, they want to make sure that they can qualify to purchase a new home.
Yeah.
Because they're going to be homeless if not.
That's
okay?
right.
Or else they don't care. But they would need to also get pre-qualified to see how much that they can afford, and look at what they're going to be, the proceeds they'll be getting from their home, and be able to pass on to the next purchase that they make. Or if they're not too concerned about that, then if they can handle both mortgage payments, if they're going to be keeping their home, if it's going to be a contingency or not, and we have to make sure they qualify with both payments.
Okay.
So and their debt ratio, if they want to hold on to both, because that's a big. In the real estate, that's a big deal right now, a contingency or not.
It is.
And then, of course, they want to make sure that they have, a reputable mortgage company that would be issuing the pre-qualification or pre-approval on their buyer's loan as well.
Okay. Really good information. I really like how you mentioned that about it being contingent or not, because in this market with multiple offers, that could be the difference between getting the next house that you want or not. And it may be because you didn't ask the question. So we would hate for somebody to miss out on opportunity just for not having the proper information. That's why it's good they contact you so that they can find out if they can go forward or not with or without that contingency.
Right.
Okay. So obviously everybody, has been talking about the rates and how low they are and everything like that. So why do you think rates are, or what are the advantages of having such low rates right now?
Well, you are not going to get a lower house payment than you're going to get right now, probably. And if housing prices keep going up, you're not going to get a house any cheaper than it is right now either. So it is the best time to buy. You can get a house payment for almost half of rent
Wow.
Okay, depending on the size. If you're paying $1,200 a month in rent, then you're going to double your square footage size in a house if you get
Okay.
that same payment.
Okay.
So it is just unbelievable the values of homes right now and the actual monthly payments.
And you made a really good point, because with interest rates being so low and prices go up, like you said, like now may be the cheapest, because if I see it every day that these prices are going up. If this house sold, this house is going to be $2,000, $2,500 more. And then I like what you said about doubling square footage. So if you can afford this $1,200 payment, you may be able to get you an actual house with a bigger yard or more livable square footage for that same monthly amount.
Exactly.
Yeah. Okay. Awesome. So what programs does Ameris Bank offer? In terms of different mortgage programs that's out there.
Just about everything.
Everything. Okay. One-stop shop.
We have construction to perm, of course.
Okay.
We have jumbo, your jumbo VA, your jumbo conventional.
Okay.
Your FHA, USDA, the conventional products, down payment assistance with the state housing.
Okay.
Those, and then some of the other ones like the Federal Home Loan Bank.
Okay.
They will be getting money back the first of the year. Some of them run out during the year.
Okay.
So they'll have to get that back. And then also the county grants are a good source as well when they have money.
Okay.
So
no matter what kind of loan they're looking for, they can always call you to find out.
Yeah.
Yeah.
We'll get them tailor made to what they need.
There you go.
For sure.
There you go. Awesome. So oftentimes what comes up is people say I am pre-qualified, or they hear pre-approved. So that is a term that, especially in our industry as realtors, are you pre-approved or pre-qualified? So if you can kind of explain or go into the difference of what that means in terms of being pre-qualified versus pre-approved.
Well, I should be asking you that question. Since you're saying to tell us what y'all think it is.
I can answer from our perspective.
Pre-qualified is a loose term, I think. But everybody calls it pre-qualification pretty much. I'm not going to pre-qualify somebody unless I've seen their credit and I know that the income that they tell me that they're getting in their job is real. Okay. So that might be a little bit more than what someone would do on a pre-qualification, which sounds more like a pre-approval. You run it through the system too, the automated system with the numbers that they've given you verbally with the credit, and see if you get a systems approval. Because if it does match up, then you're probably good to go.
Okay.
That's the pre-qualification part, which is similar to the pre-approval. A lot of times people think the pre-approval is where I've actually laid my eyes on the actual pay stub, to actually see if what they told me was correct. So that would be the little bit of difference. Now, you have a wage earner, W-2 borrower versus a self-employed. I'm really going to be reluctant to issue even a pre-qualification without seeing tax returns on a self-employed person. Okay. So I would say mine's really about the same.
Okay.
Because I've gotten that information so close that if my letter automatically goes out as a pre-qualification and the agent says this needs to be a pre-approval, it's like, oh, okay, well, no problem, because it is basically pre-approved.
Okay. So there is a difference between a W-2 and a 1099 borrower?
Yes, there is.
Okay.
Yes.
So with that being said, what is your average processing time? So if you got, a buyer who's pre-approved and goes out and finds a house and write a contract, obviously I know there's different loan types and that may affect it, but just, for the audience, just a general time frame of what could you expect in terms of processing time?
Purchase loans are always priority.
Okay.
Since we're in the refinance boom right now. So 20 business days is realistic for your conventional loan.
Okay.
Or your FHA loan. If your VA loan is taking longer than that, it could be the VA appraisers are pretty bogged down right now. But that's kind of what you're looking at. If you go into the down payment assistance programs, then you're probably looking at more like 45 days.
Okay.
Because once we're done with it, then it's got to go through its very minimal process over at the state, but it does have to go to one.
Gotcha.
Right now, if the turn times are taking longer than normal, mortgage lenders, we have some third parties that are in there, attorneys, and appraisers and inspectors and all that would be maybe affecting some of those turn times because the attorneys are bogged down as well. Everybody in this industry is.
It really is. I mean, now, I haven't been in 31 years, but I've never seen it this fast, this aggressive or anything like that. And that just goes back to, obviously it's real important to have a team, which is why I work with Teri. I know if I call her, she'll answer the phone. And if there's delays, we can communicate to work through those to make it still as seamless and as smooth as we can for our client, because we're all working for the same goal.
Right.
Anything else? I mean, that was kind of all I had, unless you can think of anything else that you may want to just tell the audience or something important that they know. I know we're doing a refi boom right now, so refinances are a big thing.
Yes.
So for someone that's thinking about refinance, tell them how to get in contact with you.
Well, I would love to handle your refinance because right now we are getting some appraisal waivers where we're putting them in there, and the system is waiving the appraisal. So in some cases, we don't have to have an appraisal. The closing costs, there are closing costs because the attorney still has to close. If we go back to the one who closed the purchase, then of course we can save that way as well. But you are going to save hundreds of dollars a month to refinance, even if it's been outside of 12 months, just outside of 12 months since you purchased your home or refinanced. We're seeing that you can go from a 30 to a 15, make a lateral move, and that payment difference only increases just a little bit. A lot of people repay more on their mortgage anyway each month. They'll round it up or something. So they can cut off a number of years by doing the refinance. I highly recommend it. Save you tons of money.
Awesome. And I'm glad, once again, she brought up that point. I didn't even think about that. But the 30-year versus 15-year, I say always get a quote. 15-year doesn't mean your payment's going to be double. And sometimes people may think that, that if I'm doing it half the time, but it's really not. So just something to think about, just another tip out there for you. Well, thank you so much, Teri.
You're very welcome.
Thank you. So as always, this is Antonio Newton with Coldwell Banker. So if you have any questions, please don't hesitate to reach out. You can reach me at 803-608-2597. And once again, Antonio Newton with Coldwell Banker.
And I'm Teri Smith with Ameris Bank, 803-206-0670. 803-206-0670.
Thank y'all so much, and take care and stay safe.
You've been watching After Coffee with Antonio Newton of the Newton Group at Coldwell Banker. After Coffee is a hyperlocal show interviewing hyperlocal businesses and people in the greater Columbia area. After Coffee, it's love hyperlocally.